We are entering a new world economy, and most people don't want to acknowledge that it's happening. Take a look. Americans are spending more money than ever, with household debt breaking a new record high again. But it's not just consumers. Corporate debt in America just hit a new record high, and our national debt is also breaking new record highs every single day. While at the same time, investors around the world have been dumping their money into physical gold, causing gold prices to soar to new record highs. So what does all this mean? Some investors are concerned about the economy and have been getting out of stocks. Others have been buying gold, and others have been asking the question, is the US dollar at risk? Let me break it down for you. The United States dollar is the official currency of the United States, but it's not just America that uses the dollar. It's also the world's reserve currency, which means other countries use it for trade and investments and other savings. That means the United States dollar is the most trusted currency on the planet. But it's only been that way for less than 100 years. The United States dollar became the world's reserve currency after World War II. That's 1944 for all of you non-history majors. And the perks of being the world's reserve currency means that the world prices oil in dollars. The world prices gold in dollars. Much of the world prices international trade agreements to settle them in United States dollars. That's why when people start worrying about the United States dollar losing value, it's not just an American problem, it's a global problem. But let's take this one step further. Now that you understand the United States dollar, let's talk about debt. More specifically, our national debt. Now, you might take out a loan to buy a house or buy a car, and the United States government works the same way. The United States government has been borrowing money to pay for things that they just don't have the money for. That includes the military, healthcare, infrastructure, social programs. So the United States government has all these expenses that they keep paying day after day after day, but how do they actually generate money? Well, the United States government has one source of revenue: collecting tax dollars from taxpayers. And going back to debt, the problem is these tax dollars haven't been enough to cover these expenses because these expenses are much greater than the tax revenue. And this is where the United States government has been relying on debt to help finance all of these expenses. Now, there's two terms I want you to understand that a lot of people say incorrectly. Number one is the national deficit. The second is the national debt. The national deficit is the amount of debt that the United States government has to take on to cover these expenses in 1 year. So if the United States government has an additional $1 trillion of expenses that they spent beyond what they generated in taxes, that $1 trillion is the national deficit. That's deficit spending because that's how much the United States government spent in 1 year beyond what they generated in taxes. But when you accumulate all these years of national deficits, that becomes a national debt which the United States government has not paid off yet. And right now, the United States government has over $36 trillion of national debt. Now, if you've been reading Market Briefs, my free financial newsletter, you already know this, but the way that the United States government gets this debt is by doing something called issuing treasuries. If you want to join Market Briefs, it is a free newsletter where every day my team is working to break down what's happening in the financial markets, including the economy, the stock market, the housing market, the crypto market, and the global economy into a fun and witty and easy to read newsletter. We have hundreds of thousands of investors that read Market Briefs every single morning. Plus, when you join Market Briefs, you'll also get our investing masterclass as a bonus just for joining Market Briefs free. So if you want to join Market Briefs and get our investing masterclass all for free, all you have to do is click the link down in the description below to sign up. So when the government wants to spend money they don't have in taxes, then they have to go out and raise debt. And the way they raise this debt is by issuing a treasury. A treasury is a loan to the government. And the people that are loaning money to the government could be individuals like you and me. We can lend money to the United States government. It could be corporations inside of the United States. It could be big countries like China and Japan, who are some of the biggest lenders to the United States government. And it can also be the Federal Reserve Bank, who is a central bank here in the United States, because when all else fails, the Federal Reserve Bank has the ability to print money and lend it to the United States, which gives the United States essentially unlimited spending power because the Federal Reserve Bank can just hit the money printer and print an unlimited amount of money. That way the government can keep spending money to boost the economy But there is a consequence to all this. And this is why the debt levels in the United States have been growing year after year after year after year, because the United States government keeps spending more money than what they generate from taxes. It's kind of like spending more money that you make from your job, except now you're financing your Amex through your Visa and your MasterCard. So what's causing this debt problem to really get out of control? Well, there's 5 points that I want you to understand, starting with number 1, the most obvious. The United States government is spending more money that they're bringing in from taxes. In the first 4 months of 2025, the United States government spent $838 billion that they did not have, which means they spent $838 billion more than what they generated from taxes. And all this accumulation of debt is leading to the second problem, which is interest payments are getting very expensive. Now that we have such a large national debt, the United States government has to pay interest on all of this debt. Again, who are the borrowers of these treasuries? Well, it's regular people, you and me, it's corporations, it's big countries, and it's the Federal Reserve Bank. All of these entities are expecting interest, and in 2025, the United States government is expected to pay a little bit under $1 trillion in interest. And how is the United States government funding all those interest payments? Well, again, it's your tax dollars. So you're paying taxes hoping that you're going to get something in return, when in reality, a lot of those tax dollars are really just paying interest for all the previous spending that the government did. Number 3, creating change is hard. What do I mean by that? We've seen the United States government work to reduce a lot of their expenses in 2025. We've seen departments get shut, we've seen people get laid off, we've seen funding get shut down. What does that do? It creates a lot of anger because people have to lose their jobs. It means that people start losing money. And this is where you have to understand how intertwined everything is. Our economic system runs on spending. The more money you spend, the more money somebody else makes. Chipotle doesn't want you to walk in, look at their menu, and then walk out. They want you to walk in, look at their menu, buy a bowl, plus the extra guac, plus a drink, because that's how they're going to continue to stay in operation. Well, the largest spender in our economy is not Chipotle, it's not Jeff Bezos, it's not Apple, it's the United States government. And when the United States government starts to slow down their expenses, they start laying people off, they start cutting funding, they start canceling contracts to contractors. Well, those are also people and businesses that are losing in income. That allows the government to have less expenses. That way they can have more of a balanced budget, but it comes at the expense that somebody else is not making money. This is where, again, reform is hard. Not to mention that we also have a situation right now where we're also seeing expenses being cut while taxes are also being cut. When in reality, if you want to have a balanced budget, you have to spend less than what you generate. Now, I don't think many people want to pay more money in taxes. But if you want the government to have a balanced budget, that means the government is going to have to cut expenses. That means people would have to lose their jobs. Companies would have to lose contracts, and other industries would have to lose funding paid for by the United States government. And if that were to happen, some people are going to lose out on incomes, businesses are going to lose out on revenue, and the economy would slow down because that means the spending would slow down. But if you want the government to run a balanced budget, that way they don't have to keep going deeper and deeper into debt, there would have to be changes, whether it's higher taxes, lower expenses, or both. Everything has a cost. Every decision has a cost, and every lack of decision has a cost as well, because what we've seen happen over the last number of years and decades is that government expenses have gone up and up and up and up and up, which means more and more people become reliant on the government, and that means that the government needs more and more tax dollars to sustain all of that spending. It's good for the economy, especially in the short term, because more people have spending ability, more people have incomes. But then the consequence is when you keep spending money that you don't have, the government has to go deeper and deeper into debt, which also then makes the inflation problem worse, because remember, inflation comes from the word inflate. What do you inflate when you have inflation? You're inflating the monetary supply. You're increasing how many dollars are out there. So when the government has to go out and borrow this money from the Federal Reserve Bank, this money gets created out of thin air. More dollars are entering our economic system. The value of each individual dollar goes down. The average American becomes poorer because the $1,000 you have in your savings account can't buy as much. Your salary can't buy you as much because now you have to spend more money on your rent and your groceries. And now the average American becomes poorer. This is why government deficit spending hurts the average person. And let's take this one step further by talking about how, number 4, COVID made it worse. During COVID, a lot of people were loving the free money. People loved the unemployment checks, people loved the stimulus checks, corporations loved the big bailouts, corporations loved the big PPP loans. There was a lot of free money going out there. And everybody loved it when they were receiving the free money, But now the impact of all that free money was, of course, the inflation problem that we saw in 2020 and 2021 and 2022 and 2023 and 2024, and even still in 2025, people are feeling the impacts of all of that high inflation. So yes, the money printing and the spending is great when it's happening, when you're receiving that money, but then eventually that money has to be paid back. And either it's going to be paid back in the form of taxes, or it's going to be paid back in the form of a hidden tax, which is inflation. And the person who bears the biggest burden of the hidden tax, which is inflation, is the person that doesn't understand how inflation works, which is generally the average person. Because 2020 to 2025, the average salary went up by around 20%. The reported inflation rate, was 23%, while the stock market went up by 80%. Investors who understand the game and Wall Street who understand how this works got rich. The average person became poor. And that's where understanding how this money printing game, while reform is very difficult, the more times that the government spends money they don't have, the more it hurts the average person. And one more piece to this puzzle that people are now starting to talk about is how we're seeing this big chunk of our workforce retire, while there's less and less people that are entering the workforce, which means less people are working to generate taxes to pay the government, while expenses are not slowing down. We'll see the impact of how that really plays out over the next 10 to 20 years, but if we don't start to see more people entering the workforce with more people retiring, well, that could create a little bit of a problem for the government if expenses don't start to get controlled. Now you might say, well, Jaspreet, I don't work for the government, so what's the big deal? I'm not relying on the government paying me money. Well, you still want to pay attention, because the reality is if the United States government has a big debt problem, it also makes your debt more expensive. Because when the United States government has a debt concern and people are worried about the United States government's ability to pay off their debt, interest rates go up. As treasury yields go up by the government, your mortgage rates go up, your car loan rates go up, your credit card rates go up. But that's not all. It can also impact your salary, because who else is a big borrower in our country? Businesses. And businesses borrow money at interest rates that are also determined by where treasury yields are. So when treasury yields go up, because people are concerned about the national debt like we've been seeing happen, that means businesses have to pay higher rates of interest to borrow that money. When businesses pay higher rates of interest to borrow that money, that can lower the profitability of businesses. And if businesses are struggling to grow their profits, that can also impact when you get a raise and how big a raise is going to be, because if a business has bigger profits, it's easier for them to give you a bigger raise. If they're not making as big of profits, they're not going to give you that same raise. Plus, the concern that people have to think about for the next 5, 10, 20 years is if the government keeps paying more and more of its tax dollars in interest, that means the government is going to have less money to pay for schools and roads and hospitals, because it's using so much of these tax dollars to pay off interest for their previous expenses, as opposed to providing services for citizens today. And we're also starting to see more investors get vocal about the national debt levels for the United States government, because they're concerned that these national debt levels could create problems later down the line. It might not be sustainable, which could create concerns about people investing their money into the United States, which could create more volatility in the markets, like we've been seeing happen, which ultimately means that the United States government is between a rock and a hard place, that they're either going to have to focus on cutting expenses or working to increase taxes. Both of these are painful, but if the government wants to run a balanced budget, they would have to reduce expenses, meaning fire some people, while also working to generate more dollars from taxes. That way they can earn more than they spend. And that's not an easy thing to do, because nobody wants to pay more money in taxes. Nobody wants to see departments get laid off. But at some point, the government's going to have to make a decision on how they're actually going to manage their finances. This is one of the many reasons why more investors have been turning to things like physical gold, causing gold prices to break new record highs, because investors are hoping and thinking that gold will provide them more protection against these concerns in the future, because gold has been a currency since before we were all here walking this earth, and it will continue to be a currency long after we are gone as well, because it is a form of hard money, and you can't inflate away physical gold the way you can paper dollars. But the reason why this is interesting today is it's not just investors that are buying gold now. We've been seeing more and more central banks around the world stockpile more physical gold as a way to potentially strengthen their currencies. Now, to be fully transparent, it's not just concerns about the dollar that have been fueling gold prices, it's also been the concerns about tariffs and potential trade wars, which has led more investors to think about potentially buying gold or adding some gold into their portfolio. Now, hear what I'm saying very carefully. I'm not telling you that you need to buy gold or that you shouldn't buy gold. I think a lot of people buy gold for the wrong reasons. I've been buying gold for many years now, but gold for me is not an investment. It is a way of saving some hard money. It's a very small piece of my portfolio. It makes up about 2% of my total portfolio because I look at it like insurance. I honestly don't even monitor the price of gold because I look at it as a way of saving hard money. But the reason why I say this is because it is so important for you to understand how our economic system works that we can become an investor, because the reality is we're going to see changes happen over the next 10, 20, and 30 years. And the people that understand this are going to be able to build wealth, while everybody else is going to get blindsided and they're going to get angry and they're going to lose and be left behind. And how do you actually do that? Well, this means you have to become an investor. And there are many ways to invest your money, but at the end of the day, having a lot of cash is good when markets go down. But it's not great over the long term, because we know that when you have concerns about inflation, the value of your currency goes down, versus when you own assets, those can be protected. So you want to own strong assets, whether it's real estate, whether it's stocks, whether it's businesses, whether it's physical gold, maybe some people it's cryptocurrencies. Whatever these assets are, you want to own real assets that can give you a return on your money instead of just owning a currency. Now, there is a time and place to save money. You want to save money for an emergency. You want to save money to buy a big purchase like a house or a car or a nice watch or a vacation. And you want to save money to buy an investment, but you don't want to just save all of your money just to save it. Yeah, that might have worked 50 years ago in your parents' and grandparents' times, but today you want to do more than just saving money. You have to become an investor. That way you can win in the system, because we don't know what's going to happen. We know that our economy is changing. We know that the entire global economy is changing, and a lot of people want to ignore it. Well, you could do that, but then don't complain if you're not on the winning side when things happen, and this is why you need to become an investor. And we also know, if we look at history, that currencies can rise and fall, and you want to always be able to protect yourself no matter what happens. I mean, we saw it happen with Latin America in the 1980s, Asia in 1997, Russia in 1998, and in the United Kingdom on Black Wednesday in 1992. And the common theme in each one of these times was a government borrowed too much money and investors started to lose confidence in the currency. Now, we still have the power of being the world's reserve currency, but this is where I want you to understand the game. That way you can be protected no matter what. You don't want to panic. You don't want to freak out. You just want to be able to find opportunities no matter what. And again, if you're looking for some resources, Market Briefs is a free newsletter that keeps you up to date on what's happening. And when you join Market Briefs, you'll also get my investing masterclass free as a bonus just for joining. And I have that link for you down in the description. Being wealthy means your investments are making you enough money to pay your expenses, so you don't need a job to pay your bills. The problem is, most people will say, just invest your money into the stock market. But what if you don't know what stocks to buy? Or what happens if the stock market crashes and now your portfolio gets cut in half and you were relying on that income to pay your bills? This is